Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Wednesday, 27th of August, recording the video just gone 7:30 PM Eastern Standard Time. I was expecting a green candlestick for Wednesday's session. That's not what we got. We've got a really small little red doji. That fourth wave correction didn't turn out to be the more common expanded flat, it's a less common triangle, hence the small doji. It's not quite done. It'll probably be done early in tomorrow's session with a little bit more sideways movement, and when it is done, I'll be expecting the resumption of that upward trend toward the target at 2025, which now could be met in just a few short days. Let's have a look at the charts. The main wave count is very bullish, and while price for the S&P remains above the lower edge of this maroon channel, which I am copying over here from monthly and weekly charts, I will continue to expect the S&P is in a bull market, because clearly it is. This trend line differentiates the bull and bear wave counts. This, for the bull wave count, is the lower edge of a base channel drawn around primary waves 1 and 2. For the bear wave count, it's a corrective channel about a zigzag. If we see a clear breach of this trend line, I will swap over the bull and bear wave counts, but we're not there yet. Intermediate wave 1 is unfolding as a long impulse. Within it, minor wave 3 was 455 days in duration and 0.76 of a point off 2.618, the length of minor wave 1, so it was a long extension. Because there is already a remarkably close Fibonacci ratio between minor waves 3 and 1, I wouldn't actually really expect to see a ratio for the fifth wave as highly likely. So, as it's been quite rightly pointed out, the target I had was particularly high and would see a lot of sharp upward movement. Commodities have fifth wave blow-offs, but the S&P just generally doesn't tend to do that, so I wouldn't really expect that to happen. Because there's already such a nice ratio between 3 and 1, and I wouldn't really expect to see a ratio for the fifth wave, that does make target calculation extremely difficult. I won't be able to calculate the target for this to end for you until I know where minute waves 3 and 4 within this fifth wave impulse have ended. Especially if this third wave for minute 3 does not show a Fibonacci ratio to the first wave, that will make it very likely that the final fifth wave will show a ratio to either the third or first. I may not be able to calculate a new target for you for a couple of weeks or so. The short-term targets remain the same. The first one has a higher probability because at 2025, minuet wave 5 would reach equality in length with minuet wave 1. That is the most common ratio between first and fifth waves, and for this impulse, beginning here, 1, 2, 3, 4, 5, this third wave does not have a ratio to the first wave, so that makes it even more likely that we shall see a ratio for the fifth wave to either the third or first. If when price gets up to the first target the structure is incomplete, or price just keeps on going up through the first target, then the next target is at 2069, where minute wave 3 would reach 1.618, the length of minute wave 1, and at 2082 minuet wave 5 would reach equality in length with minuet wave 3. But as I said, this first target has a better probability. Within minuet wave 5, no second wave correction may move beyond the start of its first wave below 1904.78. When minute wave 3 is over, I will be expecting a sizable correction for the following fourth wave, most likely to end within price territory of the fourth wave of one lesser degree, so below this high and above this low, most likely stepping above this low, and probably to find support just above the upper of the double aqua blue trend lines again, like this fourth wave does here. It will be a counterpart correction to this relatively deep second wave zigzag. I'll be expecting that upcoming fourth wave to be shallow and sideways moving and somewhat time consuming. Let's have a look at the hourly chart where minuet 4 ends here and minuet 5 begins. 1, 2, 3 is complete and 4 is close to completion. It looks pretty good on the 5-minute chart as a running, contracting triangle, and C was a double zigzag and more time consuming. D needs to complete, and then we need the final E wave, which would be most likely to fall short of the AC trend line. This fourth wave so far is nicely contained within this Elliott drawn channel using his first technique, with the first trend line from 1 to 3 and a copy on 2. If it got out that far, it should find good support at the lower edge of this channel. It should be done pretty early tomorrow, and then the upward trend should resume for maybe a couple of days towards this target, maybe a wee bit longer if the corrections within it are more time consuming. This small fourth wave correction may not move into first wave price territory below 1944.90. Alternatively, if we move all the degree of labelling just in this piece of movement down 1 degree, it most certainly could fit better with the second higher target, but again this has a lower probability. This wave count sees only the first wave within minuet 5 close to completion, and when that's done I'd still be expecting a decent correction, but not as long lasting. It would be expected to be a second wave correction, and the invalidation point would be right down here where it is on the daily chart. This is the bearish wave count, the expectation for more upward movement. The targets and validation points and everything is identical still at this point to the bull wave count. They will not diverge until this impulse here for primary C is seen as complete, and then they'll diverge. And I'm still going to look out for a possible high in October, because that does seem to be a pattern the S&P follows for major trend changes. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.